Well, China, again, as she just mentioned, is threatening now to retaliate if the Trump administration goes ahead with additional tariffs on Chinese goods. Mark Hamrick, senior economic analyst at Bankrate.com, is here, and David Nelson, Belpointe chief strategist, joins us now. Guys, good morning.
Good morning.
Good morning.
Mark, I want to start with kind of a question of what we see. We saw this play out earlier in the week. You had the futures pointing down severely Wednesday morning. But when Larry Kudlow came onto Fox Business, he kind of basically eased tensions with markets, and we saw a major reversal. I want you to listen to what Larry Kudlow said yesterday.
Technically, both countries have just proposed tariffs. There's been nothing enacted. But let's not jump to worst-case conclusions. The intent of the president is to grow the American economy, not to hurt any of the sectors. And look, our farm sector's been doing great. China should give them more export opportunities. That's important. Same with NAFTA.
I mean, there you go, Mark. The chief economic advisor to the president, sounding a very different tone. Who do we believe?
Well, I think the actions of the last 12 hours or so are the most immediate evidence of where the mindset is in the White House. And we know that Larry Kudlow is in favor of free trade, but the president perhaps not so much. It seems as if Peter Navarro has higher status in the White House these days. So, if we were to think that essentially this is the equivalent of a pitcher in baseball throwing a brushback pitch, the question is whether the batter is going to move out of the batter's box or whether they're going to take a baseball to the head. And that's sort of the two options that we have right now. And there's a reason why there's global revulsion to this prospect, because the worry is that we will absolutely damage global growth, and we don't know how this will turn out.
Right, and David, I want to read this the tweet that we got from the president as well just yesterday, talking about his characterization of this potential trade war. He said the fake news Washington Post, Amazon's chief lobbyist, has another of many phony headlines. Trump defiant as China adds trade penalties. He says wrong. It should read Trump defiant as U.S. adds trade penalties will end barriers and massive IP theft. Typically bad reporting. David, he continues to say that because of the intellectual property theft that American companies have been complaining about for years, that this tough stance on China is the way to go, David.
I agree with him. I think he's right, and I think even I think a lot of people, a lot of Republicans agree with it as well. Maybe not the GOP part of the party that is so focused on the election. They want to focus on tax cuts but the president doesn't want to defend the status quo. He wants to fix what's wrong here. Clearly, this is an escalation, and when you're in a trade war, it's scary. But we're not in a trade war yet. So far, from what I can see, this is a negotiation, and they're both throwing out some pretty large bombs here. I saw, from what I could see with the president last night, he put out that he suggested to his trade ministers to look at that. I saw one thing out there that bothers me a lot, and I hope he doesn't go down this route, is that he might subsidize the farming industry. That would be a big mistake. If he does that at the expense of others, I don't think he'll get the support.
Right, and that's a good point that he's bringing up, Mark, is that the president also said, and we don't know, we don't have any more details, but that he's going to direct the agricultural department or the agricultural secretary to make moves to protect American farmers. That's all we know. What can we do?
Yeah, well, I mean, I think that's the Larry Kudlow argument. So obviously, as you indicate, nothing has happened concrete yet, but there is the risk. And, there are essentially two things that can really help growth prospects in the United States. One of them is international trade. The other is immigrants coming into the U.S. to help supply the labor force. We obviously have the jobs report upcoming. And at the moment, you have to say the administration seems hostile to both of those concepts, both international trade and immigration.
You know what, though, David, can't you make the argument that these trade deficits aren't as bad as the administration seems to be harping about? And I make that point because even though we saw, I believe it was a 23% year-over-year increase in January and February on the trade deficit, 23%, which is high. At the same time, David, that's economic activity. That means that Americans want to buy more computers. They want to buy more engine turbines. I mean, they want to buy goods from China, and we've been doing just that.
Yeah, that's the status quo, and that's what we've been told for the last 20, 30 years. And China counts on that, And we've learned to live with that. But it has held us back as an economy, and we're ceding a lot of our leadership to them. I'm kind of encouraged looking at the market action this morning. It's modest compared to what we had the first time this was around. We're kind of getting numb to it. Europe's only down marginally right now. The Nikkei wasn't down that much. And I think we're starting to get used to this. This is a negotiation, and this is what happens in negotiations right now. I don't think we're going to drift into an all-out trade war. Not good for either side.
David, I hope you're right. I think, and you're correct, we're not down 400 anymore. We're down 200. Mark, David, thank you very much for your coverage on the breaking news this morning. Guys, appreciate it.
Thank you.
You're welcome.